markets fell for the fourth week in a row, its longest losing streak since August of last year. 46 out of the Nifty 50 stocks recorded losses for the week, some of them losing up to 22%. Hello and welcome to Editors Roundtable. This week, we'll put the spotlight on the bank's second quarter earnings. We'll decode the demand slowdown seen in FMCG, and we'll take stock of India's biggest IPO, Hyundai Motor. I'm Reema Tendulkar, with me, Prashant, Nimesh and Mangalam joining in. And also joining us on the show is Prashant Khemka, founder, managing director at White Oak Capital Management. Hi boys.
Hi, what a week this was, right? We've been saying for the fourth straight week now, we're saying what a week this was.
But this is the week where we saw brutal selling,
Yes.
right?
Finally, the signs of capitulation.
Especially
in the broader markets. We've been saying for a while now that retailers are not making money. This was a week when retailers, investors, every category of investors have actually lost money, especially from a near-term perspective. I mean, lost money means, of course, a lot of people have made 4x, 5x. But again, to see the profit going down or the profit getting trimmed, it's also a loss in the book, right? So it's been a kind of a week where it's been brutal.
I guess also the week where, a lot of the earnings that came by told you that things perhaps may not be as...
Only because of the earnings. This
all
fall,
earnings
look at India has relatively underperformed, and that the only reason for underperformance is the weak numbers. I mean, we expected weak, but to see this kind of weak numbers, it was a bit of a eye-opener for a lot of people.
The mid-cap index itself went into correction zone, having fallen 10% from the recent peak.
It was so bad that I was just coming up and I was seeing that today is a good day because we recovered 150 points from the day's lows.
But still ended down?
We were down 190, but it just felt better that we actually bounced about 150 off the day's low. And remember what happens is when initially what happens is your profits are, the fall is eating into your profits.
Yeah.
But I think people who came in the last 6, 7, 8 months,
they're negative now.
they must be negative because, some of the older people, because they made so much money, they would have done things which normally they would not do. Get into slightly riskier stuff. Chalo, ye le liya, wo le liya, paisa ban raha hai. But I think all of that would be starting to...
You heard Nilesh saying yesterday, right? That this year, सब गधे घोड़े सब चले थे. अभी आप यहाँ से खाली घोड़े चलने चाहिए.
I think Prashant Khemka is with us and he'll have lots of answers because the big question, of course, is with regards to the FII selling. I want to put some numbers off on the screen. This is just purely how much markets are off the all-time highs. And very quickly, I'll put that and then we'll bring Prashant in. So the Nifty is down 8% from its all-time high. Bank Nifty is down 7.5%. Mid and small caps are down 9.8 and 9.6. So very close to the 10% cut mark from the all-time highs. There you go. The graphics are on your screen now. And next sectors, right? PSUs, of course, topped out the earliest. And that was called the leader of the bull market. The point is the leader is now has lost way. So you need another leader, which is yet to be found. That's down 22.5% from its all-time peak. Oil and gas index is 17. Real estate is down 16. Autos are down 14 and metals are down about 13% from its all-time high. And I just want to wrap this up and then throw it to Prashant. This is the question, the big question. Will FII stop selling first or will local mutual funds run out of the so-called dry powder? That is the question. And this is how the math adds up. So far in October, FIIs have sold $12 billion of stock. Every month, they take in $4 billion of inflow. Starting cash levels are about $16, $17 billion. You throw in all these big IPOs which have happened, Hyundai and the QIPs and all of the others, and of course, the pipeline is strong. So, if this intensity of selling continues from FIIs, will mutual funds who have been propping up dollar for dollar, will they start to run out of that dry powder? And then you get into a bit of a dizzy, get into some trouble. So let's put it to Prashant Khemka. Prashant, good to have you with us here. So the question is, why are FII selling? I think China and other reasons, but more importantly, are we at a point where we can say that the maximum selling has happened and the intensity should slow down? Go on.
Certainly, Prashant. Thank you, first of all, for having me on this special edition, Diwali edition. See, it is impossible to say what the FIIs would do because anyways, FII is not like one monolithic entity, but made up of thousands of investors. But as you pointed out, what is a fact is that China, after a long time, had a massive rally and a lot of investors were very underweight in China. So I'm talking about emerging market fund managers, global equity managers who had written off China, calling it uninvestable, or otherwise highly unpredictable. So they have a massive fear of missing out when a market like China rallies 35%. That causes a big hole in performance of many of these managers who are massively underweight. So they would naturally want to reduce that risk. And so they would cut weight from across the rest of the portfolio. India is the biggest component in the rest of the portfolio. So it's only logical that a lot of that money would come from India. And that is what I don't think India dedicated funds might have seen some outflows, but that is also in from fund of fund structures or otherwise clients managing their weights, relative weights by reducing from India fund and adding to China fund. Otherwise, a lot of this reduction or outflow in India is EM managers, global equity managers trying to rebalance their position in China. So even if India was not much of an overweight, which wasn't, still some of the money would flow out of India. When it is likely to stop, it is one of the impossible things to predict. I think bulk of it, gut feel is bulk of it is behind us in terms of FI outflows. But again, unfortunately, is partly dependent on how the Chinese market does. And with the US elections, next outcome of that out next week or the week after, that's likely to also have a bearing on China and indirectly on India, on the flows in particular.
Sure. Thanks, Prashant, for joining in. Prashant, I want to ask you about two sectors which you are very much on top of. One is the private banks, where you had an exposure, but they have not done well so far. So on the private banks, your opinion? And two, on the mid-cap IT. You've been very bullish on the mid-cap IT names for a very long time. Finally, this quarter saw a lot of positive surprises, likes of Persistent and Coforge and all. So first, your view on private banks, and second on the mid-cap IT names.
Certainly, I think both these sectors have not participated in the last couple of years to the extent that, let's say, other mid-caps have. Mid-cap IT stocks might not have participated over the last 3 years or so. And private banks have not participated to the extent financials have done well or to the extent that overall market has done well. Now, we can talk about operationally. Yes, operationally, private sector banks are going through a rough patch because of credit costs rising, the deposit challenge that the channel has talked about quite extensively. And IT sector has been, for the last 3 years almost, from late 21 onwards, facing the headwind of global tech spend. I won't say decline, but yes, some slowdown after a massive ramp up post-COVID. But where we are today, if you look at the last 3 months, and even including today, some of the figures that Prashant was talking about, the sharp falls in mid caps, small caps, and overall market, and the various sector specific, you'll see the most substantial drawdowns are in the deep cyclicals in India, so the deepest cyclicals and the weakest governance were the ones that had massive rallies over the last 2-3 years, particularly starting from March 23. So 1.5 years, I think the small cap index might still be up close to 100% or so. And that was led by defense, power, manufacturing of various kinds, PSU as a pack overall, including oil and gas, which had humongous rally since about a year ago. So all those are the ones that are seeing huge drops. PSU has been one of the leaders in this drop. Whereas IT, private sector financials have been somewhat weaker, but nowhere near, I think, the rest of the market over the recent months. And IT has actually held up very well. Consumer staples in particular, despite the weak results, have held up very well last 3-4 months. Healthcare has held up very well. So, the market would need to be slicing and dicing. And within that context, IT has held up, and private sector financials at this point, again, seem to be very well positioned in an uncertain market. But all these negatives are now very well known. And it wasn't a sector which was fluffed up if you will, like many of the other sectors which saw huge thematic fundraisers, thousands of crores and whatnot. They were kind of indicative of the tail end of a bull market in those sectors, or even bubble in some of those sectors, and those are the ones giving back the most of the gains.
Just want to quickly recap, the private banks numbers that came out through the week. So from last weekend to Friday, you had numbers from HDFC, Kotak Mahindra Bank, IndusInd, RBL. And what stood out is that now the stress in the unsecured portion of the portfolio is getting more broad-based. So this is showing up in the form of increased credit cost guidance, slippage ratios are going up, gross NPAs have gone up, earnings are getting hit. So particularly IndusInd Bank, for instance, for the first time in 33 quarters, the company reported a drop in its core operating profit. NIMs are getting contracted. So at a time when there is stress in the asset quality, investors appear to be rewarding quality. So the only large private sector bank which managed to clock in weekly gains this week was HDFC Bank, as it closed up with a gain of close to about 3.5%. So HDFC Bank, as Bernstein put it, it appeared to be immune to all the troubles its peers are facing with a very resilient asset quality, and it appears that investors are now valuing quality and rewarding it. So that's just the quick recap of how the private banks performed, but we had a whole host of consumer names too.
Yeah, that exactly was, the big talking point of this week itself. When did you see HUL fall 8% post numbers, right? And, it's not a dinky toy stock which can just fall like that. It's one of the biggest falls. It really brought out some important diversions in the consumer sector itself, the schism, as you call it. Let's talk a little about that itself. So, you start with the demand dilemma. Everyone's talking about rural being weak earlier and now seeing some gradual recovery in rural. But what came out of the blue was urban weakness. So HUL, for instance, called out moderating urban growth versus gradual recovery in rural. ITC itself said subdued demand conditions witnessed during the quarter. Nestle went out, Suresh Narayanan said that, there was shrinking middle class impacting FMCG sales. Tata Consumer did say that there has been, some impact because of excessive rains, food inflation and flooding. And Godrej Consumer this morning joined us and said that there has been mild stress in urban demand. United Spirits itself saw a decline in their popular volumes, even as Prestige and above fell about 3.7%. Pidilite said early to call whether this weakness is temporary or structural. And DMart was the first one to call out the quick commerce impact on its sales in metro. Why is urban so important versus rural? Because urban sales account for 65% of the value and 35% of FMCG volumes, whereas rural accounts for 65% volumes and 35% value. So if you're seeking value growth, you have to look at urban, and if you're seeking volume growth, you have to look at rural itself. And that's not all. The presentation of ITC tells you that there have been some concerns when it comes to urban demand as well. Food CPI for September at 9.2% has been sticky. PVs and two-wheelers have seen a decline of almost 19 and 9% respectively in the previous month. We've also seen GST collection at a 39-month low, with fuel consumption lower by about 1.7%. All of these things are pointing towards weakness in the lower half of the K. But twist all of this around, and this is where the schism gets a little more interesting. Blinkit saw revenue growth of 129%, Zomato saw growth of 55%, Nykaa saw revenue growth in mid-20s, and at the same time, outside the listed space, we had big concerts during the quarter which also sold out. You have Coldplay, Diljit Dosanjh, JP Dillon, the likes of all of them selling tickets worth nearly 350 to 400 crore rupees, with 1 million people waiting in the lines as well. So CLSA had an interesting note which said that maybe the consumption patterns of India itself are changing right now. So then that leaves us with two questions. One, is the lower end of the middle class sinking a lot further, and we're just left with a steepening K curve for our markets? And the second question is, are FMCG sales still the best barometer for consumption in an economy, or have consumption patterns changed so much that we don't need to look at FMCG sales anymore? Those are two interesting and important questions. Let's go across to Prashant for the same. Prashant, staples, while they have been resilient, they are talking about some sort of demand concerns in, urban areas. What's happening here? I mean, is the wealth effect now waning out with the weakness in the market?
So, Mangalam, definitely there is from commentaries of all the consumer companies or otherwise the banking sector, what's coming through has been slow over the last many quarters. Is consumption was the commentary was more focused on rural consumption till very recently, and now what you've seen in results of many of the FMCG companies, particularly those who are more exposed to urban consumption, they've suffered more of a slowdown, whereas rural seems to be recovering. Urban has had a somewhat of a higher base because it was doing quite well till recently. So what you are saying is very much true that the consumption patterns have moved around in different ways. One is from this geographic perspective, rural recovering and urban facing some slowdown. And within the basket, that is a definitive change. Right now, the most crucial staple over the last few years would be the phone, our cell phone. And that's a very expensive item, but it has become a staple. It's no longer really a discretionary. So consumers, be it rural or urban, are foregoing, a section of them at least, are foregoing other essentials or other discretionary items for spending on, as you highlighted, electronics and entertainment, be it events that you highlighted, or be it, the entertainment that they get through the 5G phones or smartphones and so on, where the penetration is ever increasing. And not just even if penetration is full, people keep on upgrading these phones for better performance, and that is in some ways not captured in the reported numbers of the companies, but it does impact the reported numbers of the companies.
What's interesting is that increasingly the saying is roti, kapda, makan and internet. That's what everyone says.
I want to add one to that. Roti, kapda, makan, internet and SIP. Yesterday, I'm not joking, Nimesh was there, Naren was in our office, and
was very clear.
Ramdevji was there, and they were saying that actually, it's of course, there's no way to confirm it. They said, well, we'll buy. It looks like people are willing to spend less on not everyday essentials, but other stuff, but they want to stop SIPs because I don't know if it's delaying gratification in some way. It is, right? Because you're postponing consumption, but we'll see. That test is also coming.
And the roti, kapda, makan, internet thing itself, telecom companies have increased their charges by about 10 to 15% across the board. So that also, share of wallet going towards data may impact some of the FMCG consumption.
The quick commerce bit, right? The numbers are also, obviously it's not groceries which is being ordered through quick commerce.
It's not groceries. In fact, yesterday,
what Prashant was saying.
Yesterday, Albinder Dhinsa put out an EMI option for Blinkit. So anything that you're buying upwards of 2,999 on Blinkit, you can spread it across a few months as EMI. So this obviously means that people are buying things worth more than 2,999. And you saw how iPhone 16s, sold off through quick commerce. So the average ticket size of quick commerce itself is increasing beyond groceries, and now e-commerce is turning into quick commerce.
We should ask Prashant as well as to where do he stand? Prashant, a lot of FMCG companies have said that the e-com has impacted their businesses. Are you bullish on the digital businesses in India, like the likes of Zomato? Swiggy is going to list. We saw Ramdevji putting money into Zepto as well. The entire digital space. Where are you in that basket?
Certainly, Nimesh, as we've discussed before, our team, I would say, has always been very active in this new age, so-called new age space. And while the stocks had a bit of a setback from late 21 and through 22, the operating performance of many of these companies continued to do very well. And the phase of 22, early 23, or even 23, I would say, did result in quite a bit of consolidation. The weaker players in many of these segments got shaken out, and the stronger players, some of those you've shown and are showing during this show, many of those continued to build momentum, gain market share, even turn profitable in many of their segments, and launch newer segments.
We keep him next segment.
So the strong have gotten stronger through this 2-3 year period, and obviously rewarded very handsomely. Not every one of those, but several of these have handsomely rewarded investors. And that is also a dynamic not only in operating numbers that you're seeing,
Yeah.
but in the equity markets, obviously, you are seeing. And very important point that Rima and Mangalam touched upon when you think of how all these transitions are reflecting in the markets. For the last 3.5 years, starting from January 1st, pretty much to the date, January 1st, 2021, value indices have substantially outperformed quality indices, and these are all indices published by the likes of Nifty and so on. And our team has done quite a lot of work, and there was massive outperformance of value indices. So what are included in value indices? The PSUs, the utility, and so on, compared to quality. Something that Rima talked about quality, and that was something I missed when I talked about private banks doing better. My mindset was more thinking of these top frontline largest banks where we tend to focus on. Yes, there is greater pain in the mid tier and the third tier of private sector banks, because there too, within first across sectors, but then within sectors, investors are vastly big time differentiating between quality and junk or value. And that distinction is very apparent now in the performance. Over the last 3 months, quality has started outperforming again.
Yes.
Absolutely. Wonderful points and great insights, Prashant. Thank you very much for joining us. You may want to hang in there because Nimesh is going to present something interesting. How Hyundai is now the cheapest MNC in the listed universe here in India. So that's coming up on the other side. Stay with us.